You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again. It is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in the vol market, listeners? Well, let's find out together, shall we? It is time once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which so many of you folks are binging and mainlining. If you like vol, man, you've missed some great vol talk if you haven't been on the pro side lately. Of course, the vol death match, that goes without saying. We had the triumphant celebration of that last week. That was pretty fun. As well as, of course, we had Scott Nations joining us recently in the pro as well to talk all things vol. So we go deep in vol on the pro Q&As. Of course, Options Oddities, the official after party of vol views, going on right after the show today. So all you folks hanging out in the live chat, just hang out. We'll be back instantaneously. A little birdie telling me we'll be joined by a fun special guest who may or may not be on the show today here on Vol Views. So should be a fun time on Oddities. Going to be a banger. You want to check that out? Theoptionsinsider.com/pro is the place to go. Also get in there soon because the June Pro Trading Crate is almost up. You want to get your name in the hat for that. Trust me, theoptionsinsider.com/pro. The place to go to learn more as we learn who's joining us on the old program today. First, let's go out to the hinterlands of Chicago, where we are joined once again by the orangest of Dr. VIX's, repping his Oklahoma gear, I do believe, none other than Mr. Russell Rhoads, a.k.a. Dr. VIX/VStocks, a.k.a. the guy moonlighting at corrupting young minds of the future over there at Indiana University. Mr. Rhoads, welcome back to the show. You are quite orange today, sir.
Yeah, I'm glowing. I'm a pumpkin. It's pumpkin. No, it's Orange Friday. Oklahoma State people and Cowboys, we're supposed to wear orange every Friday. I wear it more often than not, but you haven't known because I haven't been having to turn on a camera.
I haven't been staring at your lovely eyes.
And I usually don't shower on Fridays. You've really screwed up my whole schedule.
Messing all things up. And then let's go all the way out to the shores of the far eastern United States, not to the Giovinazzi compound, but to one state and one compound adjacent. We're going to the ORATS fortress-like compound in New Hampshire, where we are joined once again by our good buddy, Mr. Matt Amberson, the Otto father himself. Mr. Matt, welcome back to the show, sir.
I can almost see Andrew if I look and squint and look right over the
Can you see
the
him
bay here.
Shaking his fist at the clam pirates and shooting a shotgun at them?
What's our bay called, Andrew? You're on mute, Andrew. What's our bay called?
What? We're the Gulf of Maine. Does New Hampshire have a bay?
I think that it is the goal. I mean, we don't have we barely have any coastline. So I mean, we I think we're the Gulf of Maine
you
too.
just skate and you borrow the coast. You borrow the Gulf of Maine. You just like, I'm just borrowing the Gulf of Maine.
There are
That's
three.
cool. We'll let New Hampshire have it. We'll have it.
3 miles of coastline in New Hampshire, and Matt.
I'm gonna call
half of it.
I'm gonna call it the Gulf of America.
Oh,
There we go. There we go.
Not controversial at all. And of course, that distant voice shouting across the Bay of Maine, none other than the rock lobster himself, Mr. Andrew Giovinazzi. Mr. G, how goes the endless battle with clam piracy, sir?
Yes, it gives me it's no end of pleasure to send a picture to you, Longo, of the clam pirates. And the next thing in the chat is, get the shotgun.
Yes, pretty much.
But where would my clams come from? So
from the cold, dead hands of the clam pirates that you slay,
right,
sir.
right.
You
take every once in a while they will leave a whole bushel on my dock as a thank you for them.
You don't pay the gold price for your clams. You pay the iron price.
You have to pay the Weir Guild.
In your case, the lead price for those clams. You take them from their cold, dead hands. As we keep on rolling, listeners, right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we break down the week that was and indeed still is from Vol trading and trending and analysis and all sorts of fun perspectives. And things got a little dark there, talking about murder at the top of the show. So we'll lighten it up. Maybe you like a little bit of green on your screen. And that's the case. You got some again today. Uncle Mike, wherever he is right now, probably in St. Charles, pretty darn angry that we didn't hit the all-time high on the option block yesterday. He was texting me right after the show, very angry that we missed it. Of course, it happens today while he's off the air, so you could hear him screaming somewhere into the ether, into the wind out there in St. Charles. If you live near that area, you probably heard him yelling earlier this morning about new all-time highs. Yeah, new all-time highs in the S&P, up about 2/3% right now. Dow up about 1.15%, NASDAQ up about 0.5%. Our old buddy VIX Cash hanging out around the 16.5 level. That puts it down not quite 4 points, about 3 3/4 points from where it was this time last week. Volley, our aforementioned buddy, Mr. Scott Nations there, his at the money, just the facts, ma'am, vol product, 13.5. That's down 3 points from where it was this time last week. And our old pal VVIX retreating off of the par strike down to a 90 handle, down a whopping 18 points from where it was this time last week. So vol of vol, and indeed vol itself coming crashing back to earth this week. But let's go around the horn. Let's go out to our guest first. He doesn't get to join us on Vol Views very often. Mr. Matt, sir, we'll start with you. Obviously, a wild week. We kicked off the week. A lot of apprehension about the U.S. intervening directly in the Israeli-Iran conflict. That, of course, was the subject of our question of the week this week. And then about 48 hours later, we heard of this ceasefire. It apparently seems to be holding. The market is certainly pricing like it's a done deal. Crude oil coming crashing back to earth. And of course, vol coming crashing back to earth as a result. So a lot to unpack on the vol front this week. Mr. Matt, what's been catching your eye?
I never talk about this, but the dollar index way down, broke some support, and the market goes the opposite way. So dollar going down, market going up. Volatility. I mean, it's like nothing's happening out there. The volatility, like, so we do components versus SPY. It's like 50%, which is very healthy for the market. Contango is coming back up, meaning the front months are below the back months in the term structure. The put call slope down, like, so there's no worry anywhere. So I don't know, Mark. Things are just blowing up and rising. The big beautiful bill everyone's making money, I guess, and everything's fine, and everyone's coming to ORATS. I'm sure Andrew and Russell are busy. It's just like nothing ever happened out there. So so you tell me, Mark.
Well, I've been joking for a while that this market is whistling past the graveyard. You could maybe argue it's doing that again right now. Of course, you're right. We had some signs, the economy, inflation, maybe not that great, and tariffs maybe hitting things a little bit harder than anticipated this week. But yeah, whistling past all of that, whistling past just about everything this week. So you're right. I know, Matt, for a long time you've been, I think it's fair to say, Russell's been net short. You've been skeptical, I think, to put it mildly, of this bull. Are you still fading this? Are you riding the bull but with a hefty finger on the trigger for some puts in your back pocket? How are you viewing these levels right now?
Yeah, I mean, that's what I do. I just put on my either long put spreads, or put calendars, depending on how it's looking out there. Now it's just put calendars, and then you're able to stay long and be right. So, I just have my permanent portfolio, and everything's going up, Mark. It's like gold's going up. The market's going up. So that's how I am. I mean, I hate the market from just a look at it and like all the stuff's going on, but you just have to hold your nose and protect yourself and jump in the party and see what happens.
Kind of the opposite. You're right. Of a few years ago, if you had that 60-40 or 60-30-10 portfolio with equities and fixed income and a little bit of gold, you lost on everything a few years ago. Yeah. Now we're flipping that script and you're hitting it on everything. So yeah, I guess you can't be mad at that, but maybe also right to be a little skeptical. Man, what is going on out here? Mr. Rhoads, same question for you, as you are just bathed in orange, sir. Looks like you're coming straight from the Sunshine State here, from an orange grove. I know you've been short. You've been short for a while. I think you've kind of backed off that a little bit now. What's catching your eye out there? And yet another green week and a red week for vol, sir.
I am very, very small short, and that's about all I have on right now. I just I feel like I'm going to go beyond the week, and I feel like I said this in a different forum earlier, but I've been around since the early 90s, not alive, but in the industry. And there are only a couple of other times that I feel like the market should be going down and it's not going down. And that was before the internet bubble popped, and, in the spring of 2008, and probably in early 2007. I'm always very early on these things. And once again, I've been very, very early on this thing. I do feel like we're at an inflection point where we're going to need some sort of catalyst that gets people a bit spooked about the overall market. I even felt like, and if the market had reacted negatively to this morning, we got personal spending, which I think came in a little light, and PCE, which was a little bit like a tick above. So we got slowing growth and a little bit in slight inflation and a couple of economic numbers that we saw this morning, and the market could care less. And I've had students asking me about these things. There's just a lot of money floating around in the world, and it's got to go somewhere. And, the U.S. stock market seems to be one of those places that it keeps landing over and over again. I don't know if that's because we've, with the world and a few conflicts going on, if we're a great place to invest because we got a big buffer on each side of us. And, it's almost like a flight to safety type thing. But for the life of me, I can't really explain what's going on. And then also our fearless leader just posted something. I don't know if the market's reacting much to it, because I'm on Truth Social for the first time ever. He says that the supreme leader of Iran should have said thank you for not killing him. But he's also I saved him from a very ugly and ignominious death, and he doesn't even say thank you, or say thank you.
That sounds about right.
He's going into the weekend pushing on Iran a little bit, and saying they need to get themselves into the world order and get to the negotiating table. But again, the market could care less.
Well, it's good thing. Good thing my short vol goes out today, and then I could reset on Monday after whatever happens over the weekend. Mr. Andrew, same question for you, sir. What is catching your eye in yet another wild and turbulent week on the vol front, sir?
I think we had a little vol markdown this week, and from 19 to 16 and a half, and that's where all the action has stopped. It kind of this sort of reminds me of summer days in the SPX when we kind of have these and it was in the mid 90s when we're in the middle of the nascent internet boom, and just SPX just keep going up. And I remember guys trying to drag the skew up and fight in the crowd about where the skew should be, and then like everybody just giving up and just dragging the at the money volatility all the way up because we just kept going up. Back then, a 2-handle move, because SPY was SPX. This is SPX, mind you, not SPY. It was like, $3.99, that'll date myself a little bit. And I'm kind of feeling like that's what's happening now. You've got volatility at the money is kind of dragging up, just looking at the vols, the implied vol at the money, and at least 30-day. And because we have, there's the July 9 deadline. We're waiting for the big, beautiful bill. We also have the 4th of July weekend, which is compressing short-term vol, which, all those variance future thingies with like a short term and a long term, like everything sort of cocks up a little bit. And that's what we have. And like a 16 put in VIX is 15 cents. And it's probably going to stay there until some of this news I feel like has to break, or at least SPY has to pull back to 6,100, 60.50, something like that, and just kind of because if you're trading and all you're doing is selling puts as an SPX trader, you're hedging with future. And I can tell you, in summertime rallies, the short future, short put position when you don't have a lot of call sellers sucks. And you're like, you always look at your option account, which was, woo, look at all the money I'm making the options. And then your short future account, which is just getting annihilated. And that's how, and you get volatility that even though we're rallying, VIX itself is not really going down. So it is but that doesn't mean it's bearish necessarily. It's just that traders are just, okay, we're going to buy some puts. We want to stay long, which is exactly what Matt said. He just like, listen, if I got to just dumbass it the whole summer and be long equities and be long puts, and we're up another 8 or 9%, woohoo! Put another wing on the compound. I don't care. So, and that's ultimately what buying stocks is. So, I'm as long as I can be, pretty much. So I did a lot of nibbling when the market fell apart, because that's normally kind of my MO. And my short VIX, short SPY positions aren't getting annihilated. I'm not getting killed badly because I'm smarter these days. I buy put spreads instead of negative, just puts. But I need a little bit of a drop in VIX just to cover the cost of my my index put spreads. So might happen, might not. But when the market's like this, any sell-off at all I see, I dump my protection. And we just haven't had one since 5,900, I think. So, and you have to think about it. All these problems that were a big deal, Iran, Israel, it feels like it's going to the back burner as much as the press, I think, at the beginning of the week tried to keep it on the front burner. Oh, nothing really happened. Well, it appears maybe it has. And, it is possible that things could get better, although right now, I think everybody in Congress should every Republican at least should be tarred and feathered for dereliction of duty. Maybe 3 or 4 are worth keeping. The rest, they should all, we got to go 1750 on them and tar and feather them, because they got a simple thing to do: cut some spending, cut some taxes. Not that hard, and just massive failure everywhere. So, but treasuries are going up. I mean, we've had a pretty strong treasury rally for at least 3 weeks. So, like Matt said, everything's going up. So I'm going to keep doing what I do. Maybe this little hedging stuff will pop into play at some point, but ultimately, what's given us this rally, Mark, you and I talked about it a million times, AI, heck, I'm even looking at it right now to improve everything in Option Pit. How customers look for information, how I maybe look for trades faster, all kinds of stuff. But I think ultimately technology growth fuels rallies. And right now we are still in the midst of one, which nobody knows where it's going to go. And nothing Wall Street likes better than unlimited upside. So currently right now, that's what we got. And enjoy the ride. Enjoy the ride. March, April, beginning of May was a little rocky, but hey, it's summertime. Have a good time.
Andrew, the optimistic Andrew. I'm still not sure what to do with that. Maybe the AI has already replaced you, sir, with a very happy bot. But you know what? We got Matt here on Vol Views. I always joke that Russell is the only guy on the network with his own theme song, but that is not true. It is time for a little bit of the earnings volatility report.
Earnings announcements can move markets, but what is the options market telling us about upcoming earnings events? Let's find out with the Earnings Volatility Report.
All right, everybody, welcome to the Earnings Volatility Report. You know this segment if you've been checking out the advisor's option with us. If not, what are you doing? You're missing out. We do a lot of vol talk on that show, as it turns out. And Mr. Matt, we got a little bit to the next episode, but we couldn't wait here on Volatility Views. I know the season has kind of wound down. We're pretty much in the dregs now. We're waiting for it to spool back up again for the next round of earnings. But you've been crunching all the data over there diligently week after week. What are your thoughts on how this previous season played out from a vol perspective, and any anticipations for the future, sir?
Yeah, it's hilarious because this is like the week when there's only one name on there.
Yeah, it's the weakest week of them all.
Constellation brand. So, I mean, again, Mark, the rule of thumb for earnings moves is when volatility is very high, owning earnings straddles does not do very well. So you want vol to be a little bit lower. You want people to care more about earnings announcements. So I think this July is going to be a good one. I mean, this feels like what we've got pent up is quite a bit of forward guidance, and the volatility is going to be lower. So even though the market will jack up the front months for some of these stocks, they usually don't do it as much. So I think the upcoming is going to be good. This past one was just kind of average because it started off well, but for option buyers. But what happened was the vol went up kind of during it, and we know what happens, that kind of took off some of the luster, and it ended up on being kind of a break even for volatility owners. So we're in the doldrums of earnings, and we have I think an exciting earnings. People think July, oh, what's going to happen? I mean, there are some years that get pretty wild. Russell mentioned the 1990s. I was standing behind Andrew in the 1990s, drawing on his coat, and sometimes July's got pretty wild down there. So I expect that to happen again, Mark.
You are a fortunate man to have shared such close proximity with the Rock Lobster. I mean, a few of us can can imagine the horrors you witnessed and endured during that time. But there you go, listeners, a little flavor, a little taste of some earnings vol. We go deep on that on the advisor's option. Of course, if you like that, you should be checking out the advisor's option. And also, you should be checking out all the free data we put out there on the website to accompany this earnings move results, and earnings season reports. Matt and his team crunch all that stuff, and we give it to you folks completely for free because we like you. So if you like seeing how names have performed coming into and going out of earnings season, how that stacks up to historical on hundreds of tickers, we literally give it to you for free. TheOptionsInsider.com is the place to go to find that. As we head on into the vol surface talk, you know, we've been saying for a while, listeners, this term structure, eerily, spookily, scarily, call it what you will, just kind of flat. And that always gives me kind of the heebie-jeebies because it kind of tells me, I don't know, it makes you just feel like, okay, we're waiting for that next shoe to drop. It could just be the summertime malaise kicking in. There certainly is some of that in there as well. But in general, whenever I see that in vol land, it always makes me a little bit nervous. Maybe that just speaks to me more than anything else. But coming into the start of the show, we had the cash, like we said, around the 16.5 level. That front future, that July future, 1885, and the AUG future right around 2010. That puts us down almost exactly 2 points in the July future, 2.05 to be precise, from last week. And the AUG future down almost 1.5 points, about 1.4. If we go all the way out to February and March of next year, then we can find a 22 handle on the term structure. And it is pretty much we kind of hang out at that 21 to 21 3/4 level for most of the time. And then we kind of shoot up to 22 right there at the end. But other than that, in that middle portion, hanging out to the summer into the fall and the later portion of this year is still pretty flat. Mr. Rhoads, anything catching your eye in the term structure since last week, sir?
November and December are in line with each other. I know that's not the most exciting part of the curve and not what everybody normally pays attention to, but you could see that little divot for December a little bit more markedly over the last couple of weeks. And typically as we start to get close to we get around, front month of September or October, you really can see December at a discount relative to November. I went back and I started looking at previous years. I skipped last year because it was an election year, but a couple of years ago, they were in line with each other at this time. And then as we got closer, as you fast forwarded maybe to September 30th or so, you had, you basically had, if we get there, December basically right in line with November. So it went from premium to a discount, or I'm sorry, in line about 3 years ago. So that December divot doesn't seem to be exactly what I would expect it to be. It might be giving us an opportunity. Short December, long January, or something like that. Actually, I'd say short December and long November, because it's at a good discount to January. I apologize.
I was going to say maybe the other way, but hey, to each their own. Either way, if you're getting short December, it sounds like a plan given, just how past has played out. But then again, we're in a tweet by tweet market, Mr. Rhoads. So we could be hanging out at 12 mid-December, then along comes that tweet, and bam, 26 before you know it. Mr. Andrew, anything else catching your eye in the vol surface this week, sir?
Well, I got my favorite indicator, 9-day VIX, trading at almost down to the 12 handle. Let's see here, because it was 13.13 last time I looked. We are 13.20, so we're holding tight. Got the 4th of July weekend, some balls coming out. So you got 13.20 9-day, and you got a 1960 for the July future. I'm just saying that's a pretty big premium right there. Now, so waiting for something to happen. And generally I kind of shop. I take that premium. I buy a lot of VIX puts, and I buy a lot of, then I buy some index protection in case, and I let it ride. And today is no different. So I think that's a pretty, considering how low vol is right now. Realized vol is 12%. Yeah, anything can happen tomorrow, but right now, there is very little demand for short-term options. And historically, to me, that's usually pretty bullish. So we're 61.78. Heck, it wouldn't surprise me if SPX was 6,200 by the end of the day, or sometime next week going into the 4th of July weekend. So it's America. Buy some stocks in the term structure. I would ask Russell, I bet you right now, futures are over cashed by more than at any point this year. The way I observe.
Wouldn't be surprised. Yeah.
This is. And
So could I
that's not
ask the
necessarily
question?
a bearish
Can I ask the
thing.
question to the experts? Like, I mean, I'm just looking at it. It looks like the futures are in 19 and the cash is 16 and a half. That's got to be a big gap, right?
Yes.
Yeah.
Crazy.
We've got some. It's kind of funky. Sorry, Andrew. I just stepped on you. We're kind of in a funky situation where we've got that holiday week next week, which I think some people are going to should not, but are probably maybe taking the whole week off, which would have something to do with that. We've got some really big economic numbers next Thursday, which might be a low volume day as well, which would concern me a bit with respect to what spot VIX might do. And I think that's why anybody that's short VIX through the front month future right now is demanding some sort of a premium, because we have that anomaly that impacts the index that doesn't impact the futures. The futures, it's been a while since I've run the numbers, but I have run the numbers, and there's no weekend effect on VIX futures. It's only on the index. So they do widen out and then come back together. Wouldn't be surprised if it's kind of a quiet day the Monday after the holiday weekend. If you see VIX up a little bit and the futures down a little bit. But I think it's a combination of, we got some big numbers next week and then the holiday as well.
Let's see if there's a weekend effect on the VIX options today, shall we, listeners? And the answer is decent. Yesterday on the option block, right around this time of the show, we were a little bit north of 500,000 contracts, and we're threatening that level right now, right around 475. And you might say, well, 500,000, big whoop. We were well past that, probably north of 1 million back a few months ago, and you're correct. But that was also a very spicy time in the market. VIX was much higher, and of course, the ADV for VIX options was well north of 1 million, about 1.1, 1.2. These days, that ADV is down to about 683. That said, it ticked up about 14,000 this past week. So managing to get some ADV back heading into the summer is no mean feat. Obviously, some macro factors at work there. Today, like we said, 475 on the tape. So for any day, nearly 500,000 contracts this time of the show is respectable. Heading into the summer, that's actually pretty impressive. We'll see what the rest of the session holds in store for us as we head on into our VIX top 10, listeners. Right now, we are hanging out 9-1 calls over puts. So for all of you out there who were thinking, man, this was the week, have some puts in your back pocket, you are correct. But also, people probably took them off because there's only one puts in the top 10 this week, listeners. Only cost you 142,000 contracts to break into the top 10 in VIX land right now. So that is still fairly light. That gets you to the July 20s. Again, all the strikes on this board I'm looking at right now, listeners, you could argue we're kicking it off with the most reasonable. That is unusual. Usually we see the 40s, 80s, pars, something weird kicking off the bottom of the top 10. Today, it's the 20s. You could argue of all these calls, it might be the one you want to have in your back pocket. And there we go. $142 of those. Number 9, 154,000 of the little bit farther out, but still reasonable, all things considered, July 25s. Number 8, $166 of the July 30s. Now we're starting to get up there. And then number 7, what I'm usually expecting to kick off our list, 186,000 of the SEP 80s. There we go. There's the fun. And number 6, 204,000 of the AUG 42 halves. Number 5, 228,000 of the July 40. So you got a nice call strip in July here, 25 all the way up to 40 for you, listeners. Number 4, 241 of the no 47 halves. So you know if you've been listening to the show for a while. That strike's been a popular one just about every month. Number 3, here we found our Huckleberry listeners, 274,000 of the July 17 puts. We were joking about put strikes on the show last week, but pretty much just about any put you had in your back pocket, with the exception of those diehards on maybe the 15 strike, you're looking pretty decent this week. 274 for number 3 of our lone put, the July 17 puts. Number 2, 287 of the AUG 25. So if you want a little bit more duration, maybe these are your Huckleberry. And the big dog again this week, 322 of the July 35s. But you know what? I could see him stewing in his orange, listeners. He's upset that someone else got a theme song on his show. So let's get there now. At least his song plays twice because it's time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
All right, Mr. Rhoads, have at it. The floor is yours, sir.
Monday. First off, Monday. So I talk about the data that I pull every once in a while, and Monday was the busiest day for block trades using VIX weekly options that I think I've ever seen. There were 109 trades of 100 contracts or more. Usually it's about, like today, it's under 20. But usually on a heavy day, it's usually 50 to 60. And we did have a lot of volatility on Monday as well. So Monday with VIX up around 2041, somebody bought just over 500 of the July 2nd 24 puts. Paid $385 for them. Break even on that's 2015. Last I checked, you could probably sell them on the bid at $6. Looks like they haven't done it yet because the open interest is still, the OI increase is still the same, and the volume hasn't occurred. So I think they're hanging on to that. I don't know about you guys, but just for the heck of it, if I had a decent profit like that, I might take some of it off. But ain't my trade, so I don't get to say what they do with it.
They want to squeeze it right all the way till the end, right into the holiday.
I know, right till the end. Well, right now, what would that be worth with VIX around 1650? That'd be worth 750. So, maybe hitting the bid at 6 is not a good idea.
That's I say that, and you're going to do that, and then right before you exit it, that tweet's coming out, right? And bam, it's all gone.
Oh yeah. Then a little bit later that day, with VIX at 2111, somebody bought 200 of the July 23rd 25 calls for $1.68, sold the 30 calls for $1.05. Net cost of 63 cents. My assumption, if this were my trade, I'd be looking for a move to the upper 20s, low 30s to get out of it. So there. On Tuesday, things get kind of interesting on Tuesday with VIX at 1804. Somebody sold 250 of the at the money 18 calls for $1.87 and bought the 21 calls for 72 cents, taking in $1.15 credit. This was just before the close on Tuesday, that's when VIX was at 1804. You could do a possible maximum loss there of $1.85 if we get a volatility event. Just before the close on Tuesday with VIX at 1755, 2 separate trades. And I think these were exits. I think somebody owned the 15 and the 16 calls, had done it as a stupid. I almost feel like we talked about this in the past. But they sold the 16 strike calls for $1.89. They sold the 15 strike calls for $2.92. Keep in mind, these expired on the open the next day. Based on the VRO of 1714, they did the right thing here. They saved themselves 75 cents by getting out of it the night before on the 16 calls, and saved themselves 88 cents by getting out and selling at $2.92 on the 15 calls, as opposed to the cash settlement which would have been $2.14. So pretty smart there. They also had a little bit of time value in those options relative to, they sold at $1.89 when VIX was at 1755. There's 34 cents of time value if you're using spot VIX, which I do think is appropriate the afternoon before settlement. I know we always talk about the futures, but I think that's why I always use spot VIX when I'm talking about this. VIX on Wednesday VIX at 1701. We had somebody buy 500 of the July 9th, 28 calls for 28 cents. 28 is my favorite number, so I just wanted to talk about that one. But also, that kind of matches up with what I was talking about earlier with the funky nature of VIX right now with big news later next week and then the holiday weekend, et cetera. Owning some calls that expire on July 9th with some illiquidity on next Thursday and getting an employment number and a couple of other numbers might not be the worst trade in the world. And then on Thursday with VIX at 1644, somebody bought 400 of the July 2nd 17 calls and sold 400 of the July 2nd 18 calls. Net cost of 70 cents there. Not really excited about that trade. At the end of the day, VIX would, and then at the end of the day on Thursday, this trade I'm very excited about. And Andrew, I want to know if this is your trade. At the end of the day, yesterday, VIX at 1628 to 1644 range, somebody bought 4,000 of the July 2nd 16 puts for between 6 and 7 cents.
That does reek of the rock lobster.
And it looks like they bought 1,200 more as of the first 2 hours of today.
Ooh.
I think some of the calendar anomalies make a short volatility trade. It makes an awful lot of sense. I bought, I actually bought the 20 puts that expire on next Wednesday when the index was at about 1645, and I paid $230 for those, or $231 for those. So I have a break even of 1770 on those. And that's my weekly trade. What I want to do now is I want to apologize for how ugly I've been toward people that trade the weeklies on the bid or the offer. I worked that freaking thing forever. There was a 20-cent wide spread. I gave up 12 cents. I gave up 15 cents. I finally gave up 19 cents and got filled. It just so and I partially out of frustration. It was offered at $232 and I paid $231. It was like at the time it was $212 by $232. I'm just kind of working my way up. I'm like, I'll get filled at $225. Not on the weeklies, man. Not on the weeklies.
The market gods, karma, sir, coming back at you, hoisting you on your own petard, sir. In the VIX weekly option. That does sound like a rock lobster special, though. I agree with you. Some 16 puts. Maybe we'll see if he likes those in a little bit. Let's see what the market likes right now. Like we said, listeners, kind of heating up out there in VIX land, which heading into the weekend before July 4th, not normally the spiciest time in vol world, at least from a volume perspective. And 500,000 contracts right now, all things being considered. Not terrible. Again, the big dog today, about 50,000 of the July 17 puts. We went and checked. They're going up in big blocks for about 39 cents, which kind of makes me wonder, is you like that price, 39 cents for the July 17 puts? I mean, these are going full monthly July, so you got some time. You like that, or you think maybe the moves behind us is a little bit too late to buy these, at least for 39 cents? I'm curious. Hit us up. Let us know. Number 2, that just went live a few minutes ago. 37,000 of the July 16 puts, so getting back to that strike we know the rock lobster loves. Number 3, 28,000 of the July 27s. Number 4, 25,000 of the July 22s. And number 5, 16,000 of the July 30s. A Thursday, a little bit more paper on the tape. 739, the big dog. 103,000 of that same strike. July 17 puts. So they've been kind of the trade of the week out there. Number 2, 81,000 of the AUG 30s. Number 3, 78,000 of the AUG 25s. Number 4, 42K of the July 19 puts. Coming in at number 5, we've got the July doubles, listeners. 30,000 of those exactly. And then Wednesday, 566 on the tape. 67,000 of the July 35s to number 1. Number 2, 55,000 of the July 17 puts. Yet again, that's a hot one. Number 3, 42,000 of the July 21s. Number 4, 30K of the AUG 18 puts. And number 5, 20,000 of the D's 42 halves. Don't see a lot of D's on the board. That was clearly opening, at least. Tuesday, 762, the big dog, 44,000 of the July 20s. Followed by number 2, 38,000 of the July 22s. Number 3, 37,000 of the July 40s. Number 4, 37,000 of the AUG 22s. And number 5, 37,000 as well of the July 16 puts. And going back to Monday, 638. So not the heaviest week out there, but fairly dense, all things considered, heading into a holiday July week. Almost 700K a day. That's not bad. 638 on the tape for Monday. The big dog, 74,000 of the July 17 half puts. Followed by number 2, 31,000 of the July 40s. Number 3, 24,000 of the July 16 puts. Number 4, 22K of July 17 puts. So they were active every day this week. And number 5, 20,000 of the July 19 half puts. Mr. Rock Lobster, since you were invoked, we'll start with you. How many of those puts expiring next week on the 16 strike did you buy? And then anything else catching your eye this week, including very active July 17 puts. You down for those, sir?
Yeah, next week, I have to say I don't like how it fits the calendar, quite honestly. It could happen, but I have to say no, it was me. Anything catch my eye? Yeah, there's been more put action in general in VIX. Like maybe this VIX can trade at a lower level, but I have to say is we want to actually see that happen. We want to actually see that happen.
Mr. Matt, sir, the final word on VIX is yours. Anything catching your eye in the realm of VIX options this week, sir?
Yeah, I mean, you know me, I love the small guys, and again, it doesn't have to go up to them like those way out of many calls. I'm still scratching my head, and I'm really interested to see what's going to happen to this spot versus future, because the future sure seems high to me. So that's what I look at, Mark.
All right, let's get out to the rest of the vol landscape. And since we got so many products and we got to get to the crystal ball as well, let's condense them all. Then everyone can pick their favorites, what they want to talk about. Let's get out to inverse land first. SVIX 1530 right now, up about 1.4 points from last week's show. I should have told everyone I overwrote my SVIX, so that meant, of course, it was going to pop this week. But there were other things to do against it. We'll talk about oddities in a little bit. I know some of our chat had that same fun going on, but one of the more active weeks in SVIX, at least from an underlying movement perspective, not from a volume perspective, only 2,600 contracts on the tape today. The ADV 5,100, down about 200. Doesn't seem like they're going to hit it today, but maybe if things pick up. V-Yield, Mr. Rhoads' favorite holding these days, 24.93, up nearly half a buck, so watch out. Things getting spicy out there. UVIX was at a 22.80 when we kicked off the show, one of the rare moments where UVIX is actually unchanged. As of right now, it's given up about half a buck there, so it's down to about 22.30. So again, down about half a buck from where it was this time last week. Only about 16,000 contracts on the tape right now. In UVIX, the ADV is 26,000, actually up about 1,000 on the week, which is kind of interesting. UVXY 19.25. So it seems like I should say vol getting a little bit spicier as the show goes on. Not much, slightly. It was 18.90 when we kicked off the show. So that puts it down about 1.65 points from where it was this time last week. We had about 48,000 contracts on the tape when the show started. That is up to about 70,000 now. So again, respectable. Even when you see the ADVs, 88,000, it's up about 4,000 from last week. So certainly seems like it's on track to hit that. And another product I mentioned earlier, I've been playing, a lot of our chat's been playing. This is VXX. VXX popping, so good times here. Hope you got your puts off, listeners. 48.25 when we kicked off the show. 48.85 right now, so that puts it up. It was down exactly 6 points from where it was this time last week. Now it's down about 540, listeners. We had about 13,000 contracts on the tape, and right now that's up to about 20,000 on the tape. The ADV 35,000, up about 3,000 from last week. Mr. Matt, as our guest, sir, any of those vol ETPs catching your eye this week, sir?
No, I don't play in a lot of those, so I'm going to let my fellow co-hosts talk about those a little bit more than I do.
You're going to save your bullets for some wildness and oddities. I can feel it, sir. It's coming.
I got to pace myself, Mark.
I know. Welcome to my world, sir. I'm all gas, no brakes, baby. You just got to go. All right. Mr. Rhoads, same question for you. How much V-Yield are you hoarding this week, sir?
I don't hold it anymore because it doesn't trade. And I even pointed out that right now, the volume, unless there's something wrong with my machine, the market volume today is zero, which is really disappointing. It truly is disappointing because when you look at it, when you stretch it out, the strategy over several years, it really is a nice thing that grinds out some decent profits with really low volatility. I think the big disconnect there is anybody that wants exposure to volatility wants to have an instrument that's going to give them a double every once in a while or something. It's a bit more exciting. But this is your grandmother's volatility ETP, and grandma ain't trading today.
I was gonna say maybe if your grandmother is past tense, then this is her vol ETP because this is about as sleepy as it gets. Mr. Rock Lobster, sir, anything catching your eye in the world of vol ETPs, sir?
Yeah, you know what? I just say the simple thing is there is a mass amount of decay in all those products now because of just the way the futures are set up. And you look on a day like today and you'd be like, UVXY should be down on the day, and I look at it and I see, VXX is up 43 cents, UVXY is up 36 cents. So where's the decay? They own some real expensive future products that are just not rotting away. So, Russell did mention there's the futures are hanging out there because you got the weekend effect and all that kind of stuff, but you would think they'd be a little softer than they are right now. But I still think the plug is going to get yanked on it eventually, but because nobody believes, or maybe this is the most hated rally ever, but I'm surprised that, again, those products are higher because futures are higher. And what are you buying the future for now at near 19? So somebody is seeing something I ain't.
Yeah, we need those futures to come crashing back to earth towards the end of the session. That'd certainly be a nice thing. As also towards the end of the show, so that means, listeners, it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball, the portion of the show where we endeavor to pin down the vol gods for the coming week and see if we can nail them down. Like we said, it seems like as we're coming into the tail end of the show, the market rally kind of fizzling a little bit, unless you're hanging out in the Dow. Dow's still looking juicy, up about 0.85%, I should say. The S&P only up about 1/3%. NASDAQ up about 0.2%. And VIX Cash still hanging out 1645, 16.5. So kind of interesting to see as other products like VXX and UVIX are firming up out there right now. Kind of interesting stuff. As we're coming into the tail end of the show, last week on the show, I should say, it was myself, it was the Rock Lobster, it was Dr. VIX, and it was Mr. VIXologist, a.k.a. the winner of the Vol Deathmatch. And Andrew was the lowest at 19.5, and even that was 3 handles roughly away from where we are right now, listeners. So spoiler alert, no winners on the crystal ball this week. Jim was at 20.5. Russell was at 21.78. I was feeling spicy at 22.25. Yes, by the way, I am being reminded by our producer, no show next Friday. Obviously, that is the July 4th holiday. So we're going out 2 weeks, which makes it doubly dangerous and doubly dubious. Mr. Matt, as our guest, you weren't on last week, so you didn't get a chance to swing and miss like the rest of us. So you get the dubious honor of going first. So remember, 2 weeks from today, what are you feeling from a vol perspective, sir?
I'm going right in between the future and the spot right now. So I'm going to go 18.25.
18.25 for Mr. Matt for 2 weeks from now. And let's see, the next closest was Andrew. We're literally the closest, 3 points away. So I guess, Andrew, you get to go next, sir. What are you feeling for this time next week?
2 weeks from now, that would be what, the 11th? I'm going to say, what's a good, let's see. I'm going to say 15.25. We're going to see some new lows after that. 15.25.
Ooh, 15.25 for the Rock Lobster. He's feeling some downside. Mr. Dr. VIX, I should say. What are you feeling for this time 2 weeks from now, sir?
I'm going with 2001. I don't think we're out of the woods. We're going to be, earnings are going to be in front of us. And then I just, real quick, I know we're tight on time. Matt, nice observation on your part. Sometimes I run numbers while we're doing the program. We are at the widest spread between the front month future and the spot index in 2025. Before this week, the widest it was $1.76. I've got 262 right now. Nice observation. Hadn't even been above 2 until this week. This year.
There you go. Holidays, adding all sorts of fun to the work. So you said what, 2001, Mr. Rhoads?
Yeah, 2001.
2001. An interesting movie. And is it an interesting ball guess? I'll leave that up to you. And then I will go last here, listeners. I was feeling a little bit spicier as well. I'll let Mr. Rhoads have the 20 handle, though. I'm going to say, Matt's already at an 18. I'm going to say 1965. An interesting year. Is it an interesting vol guess? I guess we'll find out. Hit us up if you have your own prognostications out there, listeners. If you're listening after the fact, just send them in, questions@theoptionsinsider.com or at options. That'll get us. And send them in today when the show goes live. And if you hit it, then you too can win fabulous prizes. All right, that music means we are done for this week. Mr. Matt, you're not done. You need to save up your voice, so we'll let you go first here. If folks want to check out what you got cooking, where should you go? What should they do?
Yeah, come on over to ORATS.com. We've had record months, record weeks of signups. We have, of course, backtesting, data, and all sorts of stuff. So, yeah, come on over. It's going off. We have a community page that you could ask your questions or talk with other people and trade ideas and all the stuff. So, ORATS.com, Mark. Thanks.
If you like Mr. Matt, stay tuned. If you're hanging out in the pro, he's going to reload the gun and come back armed with all sorts of wild, unusual activity. So it should be a good time. Stay tuned for that. Options Oddities. Get that on the pro if you haven't done so already. And Mr. Andrew, sir, where should folks go if they want more pit goodness in their lives?
Optionpit.com. Check out all my products if you want to learn how to trade this stuff. They are all doing very well. And hey, if you want to learn how to trade options, do it with somebody that actually trades his own trades right there live in the room. Opens them, closes them, puts out alerts. This is what I'm doing. Crazy. Who would have thought it? Who would have thought an educator guy would actually do that?
At least until the AI Andrew takes over. And then that's
right. And then you're like, woo, woo. Then you don't know what's going on there.
Check them out, listeners, optionpit.com until Otto goes over there and nudges him aside, and then Otto is slowly taking over.
Otto, the AI Andrew boss.
Otto taking over the options world, optionpit.com to learn more. And Mr. Rhoads, you got any rogue AIs in the rearview mirror, sir?
Just if you want to follow anything that I'm doing, I always put it on Twitter. It's my full name. When I'm back in a couple of weeks, I'm going to have a lot more to talk about.
Oh, well, I'm looking forward to that.
I'm in the process. My family has left me alone for 2 weeks. I'm hunkering down and going to launch something new.
Ooh, I like it. I like a fired up Mr. Dr. VIX. So stay tuned for that. Keep an eye on him, listeners, on the old Twitters. In the meantime, 2 S's, 2 L's, RHOADS. That's going to do it for us on Vol Views this week. It's also going to do it for us on the on-demand side. For the rest of you hanging out in the pro, we'll be back in a little bit with Options Oddities. For all of you out there, have a great weekend. Stay safe out there. These are wild times. We are all living through some literal weekend risk week after week. So keep your powder dry. Keep your head on a swivel. We'll see you back here on Monday for the option block. No Vol Views next Friday, obviously. So we'll see you back here in 2 weeks. Another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.